Good morning, good afternoon, good evening. Till now, we have been talking about the base building blocks of trading. Today is the first time we would be looking at the trading as a business, where we would look at how we will be able to make exact entries and how do we really track the market. We have seen pieces of this when we looked at the analysis. Way of doing analysis by supply demand areas and the trend lines. We have seen some basis of this in mind management 102. We have also seen some of the basis of this on some of the commodity videos. So now we are just going to be putting everything together and to see where how we could have taken entries in last few days. And I've chosen Nifty, but it's exactly the same wherever you go. Uh, Before we get into it, quickly risk disclosure. Investing is risky. Please evaluate your own risks before you put in your hard-earned money. This presentation includes market analysis, all ideas, opinions, and everything thing is my own, but I do not recommend you to use those for investment, trade, or to speculate the markets. Do your own study, learn yourself, and most important, financial success depends on various factors, internal and external. We cannot take responsibilities for your financial success based on these videos. This is something that you have already seen, so I'm just going to get into a little bit deeper into it. The support resistance levels, the continuation patterns, and the trend lines. The If you need, you could refer to my video there on our Facebook page. We have been discussing the technical movement of Nifty on a daily basis, and I have been putting in what I observe every day, uh, day by day, bar by bar. I've been talking about it, and we are going to be reviewing that quickly, and then we would see how and where we could have taken those entries and uh, where is the target, how do we do all these things. Okay, now uh, why do we start on 1st of June? That was because the trend, monthly trend, the daily trend is up for Nifty, we know. And on 1st of June, we had a lower low and a lower high, which basically suggests that the trend is getting exhausted. And we started the daily commentary on 4th of June. But the key question, although I was doing all the commentary, the key question is how do I use that? How and when, where should I put my trades? How could I get good risk to reward? And how can I look at the high probability trades? So, without wasting too much of time, let me quickly go to the chart. I've just removed the clouds because they're just a little bit of irritant on it. What I have here is a simple candlestick chart with just the pivot levels. You would have already appreciated the way the pivot points get really supported and used as a resistance. For example, here, this particular area, pivot point got a very good resistance. We go sideways. When we break up, we come back again, test that level, and then go up. So this was the last breakout which was there, and 1st of June here on this candle we printed the lower low and lower high both. You could have looked at even a candle, couple of candles before where we had lower high. When we see something like this, we start looking into it to see what are the trading opportunities. Please, these are not for investors. This is not for the long-term capital. For long-term capital, I've already talked about how to do the portfolio analysis. Please do not mistake this. Here you get few nifty points to trade to get good quick buck, but do not use this to sell off your investment portfolio at all. Okay, let me look at this. So 1st of June we had a lower low, lower high. After that, on the 4th of June, which was the 2nd of June, right? 2nd of June, which was a Friday, if I'm right. Let me just check that. 2nd of June was a Friday, where we have seen a major reversal. Typically, my observation, limited observation, Fridays are the days when you would see reverse action to the trade. If there are two kinds of people, right? Those who do not want to take major risks, so they take a position on Monday, Tuesday, they get out on Friday and go for a vacation over a long weekend. There are another set of traders who uh, predict what's going to happen over the weekend. So take trades on Friday, wait till Monday and get exit on Monday. Mostly option traders who want to eat away premiums, the time value. Those are the ones who enter on Friday. So you would see a little special treatment on Friday. Okay. So when we saw something like this on Friday, you should have raised your eyebrows, and that's exactly what I also had put in here. Okay, let me quickly go there. You must have seen this, so but there's no okay. Uh, Taking time. Leave it. So here. Okay. So where Friday close was strong and showed very nice support, are bearish. No, that is the next one. Actually, I'm so sorry for that. 6th June, even before that. Okay. When was this? 5th June. Okay. So uh, Nifty is yet again showing strength. So this was the 5th June. 2nd June. Where it go? I lost that. Okay. Sorry for that. Sorry for taking a little while. So, anyways, let's not get into that. We had a very nice, strong close on Friday, and I was actually expecting this to become uh, an evening star. If you had a red candle here, it could have reversed the trend. There were two reasons for this. One, we were close to the support one level. There is a high chance that it reverses on the support one level, and second, the trend has already shown the exhaustion the previous day. So I was expecting actually an evening star formation there on daily. Did not happen. On next day, Monday, we opened almost at the same place. We could have shown a red candle. I would have been very happy. But then market had something else in mind. It went up. Next day, which is a Tuesday, here on 6th June, we actually opened gap up, a huge gap up. Okay, this close was about 96.75, and the next day open was 97.04, about 25 point at opening we opened, and then we moved up a little bit, and then by the end of the day we gave away everything. So these kind of huge red candles are something that you need to look at. What really is bad with the market? Why people are selling? If people are selling, if market is selling, there is a reason. Okay, and you need to be looking at those reasons. And I had written on that day saying that if now this becomes an anchor candle, if we happen to close below this candle, we could be sure that we will have little bit of downward movement. If we happen to close above the tail of this candle, the high point of this candle, we would see a major movement. So for example, if you just go through here on this day, which is 5th of May, I think you could see my cursor, 5th of May. On this day you had a very large red candle. You are able to see the open, high, close on the left hand side, and the moment you had a green candle closing above that, you could fairly be sure that it's gonna go up now. It went up, came back, it tested the same candle one more time, and then went up. So that's the way these large red candles behave. Not same way most of the green candles. I mean, if you are in a long term bull trend and then you see a red candle, you should be worried about it. But if you are looking at a chart which is in long term bear trend, then green candle will be playing the same role. Okay, now on this candle, I said something is to be worried about. The next candle was again a doji. Doji is saying that the market is confused. They don't know where to go. Again, one more gap up, and again this kind of a bearish engulf, and again you're showing the weakness in the strength. On this day, if you really look at it, you would start looking at the texture of the market, because a lot of one, two, three, four, five candles have been doing nothing. They are completely sideways. So now what we want to do is we want to look at what's really happening on a short term time frame. What really is the market trying to do? Before I get into short term, one very important saying: trend starts when a particular value is rejected. Okay, what is a value? Value is where sellers are comfortable selling, buyers are comfortable buying. So on these 1, 2, 3, 4, 5 days, you had sellers comfortable selling, buyers comfortable buying. So that is the value. And it ends, the trend ends when people accept the value. So this is where the acceptance of the value has come in, not 1 or 2 days, 5 days, which is almost a week. And when these kind of things happen, you need to look at the texture of the market. How would you look at the texture of the market? Little go little down. So I would start looking at an hourly chart there. Let me quickly show you those days. Okay, so this is your uh, 6th of June, big open and then given up everything. And then next day also opened up, didn't do much, closed the same place. Next day it opened up very, very high, gave up everything. Okay. So on this 8th of June, when we saw that second engulf, if you really look at the hourly chart, what you see is a trend reversal. I believe you've let me quickly draw those lines for you. The line. So you see one. I'm uh, I'm not very comfortable with this particular charting, but let me see if I'm able to show you something. This is one peak, and then this is another peak. Correct? So with these two peaks, you would see lower peak and then lower low. Once these things are done, you really want to see, want to be able to draw a new trend line. Okay, so let me just quickly remove these lines. So here, since now I have seen a new trend line emerge, I would first draw that trend line. Before that, of course, the trend line was going up and you had break of that trend line. So now I draw a trend line from here. Okay, when I have drawn this trend line, another thing that I observe is on this day, although it tested the PP line, it closed above the PP line. Now I am going to be looking at shorting opportunity on this day, 8th of next day, that is 9th of June, where it will give me a trace back to the first resistance level. Okay, so my expected entry is somewhere close to 9668 and the trend line support, which is 9670. Okay, so this is my entry level, expected entry level. And where will my stop loss be? My stop loss is going to be one, if I am very aggressive, my stop loss could be high of this particular candle, which is my second pivot, because if I cross that, my second area of supply is going to be taken over, or ideally it would be above this. So let me quickly, when I draw the trend line, I also need to draw the supply demand lines. I am going to draw it in blue. No, I need to draw horizontal line. Horizontal, and I will draw it dotted line. Okay. So this is my low of the supply level. This is the high of the supply level. Okay. So my stop loss is going to be little above 9706. Again, that is the same level of my long bear candle. So 9670 with a stop loss 9710. About 30-40 points of stop loss is what I would need to go with. And when will I exit my trade? One way of exiting my trend is, now I have got my trend line. Whenever I see the full candle above my trend line is when my trend is broken, and that would be my level. Or I can also keep on going little bit aggressive. For example, if you look at it, this is one uh, peak and this is another peak. So if I have to draw a later little aggressive trend line, this is where I would draw it. But this is an aggressive trend line, please keep it in mind. Okay, so this becomes my, oops, why did this line move? This line is here. Okay, so this second line is my aggressive trend line, and this trend line, when this is broken, as in I see a complete bar which is above this particular trend line, which actually happened the next day itself after this gap up opening, I might actually be away above that level. So I might actually 9599. No, what is this level? This level is above high of this candle, 9610. 9610 could be my first exit level, but because I still don't like the overall texture of this market, I would continue. Another way of exit is the support 2 level. Support 2 level here is 9562. So 9562 could have been my exit level from entry of 9670 to 9560, about 100 points. This is definitely a good exit point looking at a 30-point stop loss. So these are multiple areas where you would be able to take the exit. There's another one that I am able to spot right away. See here, there was a mini downtrend. Okay, because you had one peak and the other peak. It's really not something that I would give too much of interest into to do any trading. But immediately after that, you had a full candle above it, so it got broken. But then this should have given a particular support or a demand area. I mean, supply area, which becomes a demand area little later, which has got. Let me change the color. So this is where you have the lower of the, oops, okay, I actually drawn a rectangle which I like drawing. So this was my area. Okay, if you really look at it, it broke my other supply area. It has gone up to test it again, and now it has broken down again. So when this breaks up, now this becomes my next level of exit point. Okay, stop loss level, if I would say. So 9650 is a very good stop loss level for me, and to just continue with this downtrend. What's going to happen tomorrow, I really don't know. If you look at the weekly charts, one thing I know is trend is my friend. I am just going to be watching the trend, and I am going to be playing according to the trends. Let me quickly remove some of these lines. and zoom in. So if I look at uh, mm, if I look at my weekly chart, I already have printed a very nice evening star. This evening star, if I look at it, it's not close to any of my weekly support or resistance levels. So I'm not very sure if this is going to be honored as a very nice evening star, and if we are going to be getting a trend reversal. But at the same time, it is an evening star. If I see a follow through of this evening star, I I may actually be in a comfortable zone to add on to my bear positions. Again, this is only for traders, this is not for investors. Even an evening star on weekly, please do not consider that to just exit your position. So here, see, you had bad patterns here. You had so many places in Nifty, you would see so many bad patterns, you would see so many similar to evening stars and engulfs and everything. But then the way Indian market goes is that we have seen a very strong cycle, and this is not a market which you want to be shorting as yet. Till the time, if you at all want to see the shorting opportunities, look at the clouds, look at the positions, and then take it. I would not recommend you doing anything with your investment portfolios. Okay, see, look at the strength of the cloud, it's just going up. Even if it comes down, it will come down a little bit here and there. This monthly, I'm sorry, I need to go to weekly. So even on my weekly chart, even it has to come back, it will come back probably to 9300. Worst case scenario is probably 8800. But these are not the places where I want to trade as in my investment capital. These are the places where I will add on to it. Okay, I believe I've been clear enough. So but if you have any doubts, please put in your questions on this. We will take this up little more details. If you have liked it, please like it, subscribe my channel to get more and more interesting stuff. Looking forward to learn much more with you on an ongoing basis. Thank you. Have a great day. Cheers.